Singapore's market had a lively week, with sharp moves on both sides of the tape that hint at where money is flowing next in the STI and why it matters for local portfolios. Welcome back to Iggy's STI Movers and Shakers, the fast breakdown of the top 5 gainers and top 5 losers, plus clear takeaways for Singapore investors looking to grow wealth with focus and discipline. Hey friends, welcome back to the channel. I'm Iggy, covering stocks, finance, CPF, and the big trends shaping our money in Singapore. And the investing Iguana was ranked 8th in the 2024 Influential Tigers by Tiger Brokers, with over 1 million reads, 58,000 likes, and more than 600,000 watch hours as of August 2025. So let's dig in to today's action on the Straits Times Index and what it means for smarter moves this week. Here's what viewers will get today: the reasons behind each move, the signals for CPF or SRS planning, and a clean map of near-term risks and chances across sectors on the STI. Prudential USD, ticker K6S, was up about 33%. The spark was an active buyback program where Prudential repurchased and canceled roughly 290,684 shares, a capital return signal that often squeezes supply and supports price momentum when sentiment is already firm across insurers. For Singapore investors, buybacks can act like a quiet dividend by lifting per-share value. But watch sustainability and whether buybacks pace with earnings and solvency ratios before adding through CPFOA investing channels that favor stability. Market-wise, strong insurer flows can flag a defensive tilt as investors prize cash generation. So, ask this: is this a fresh up leg or a post-buyback sugar rush that cools once the program pauses? Centurion Accommodation REIT, called CURRET, ticker 88U, was up around 10%. The new REIT spinoff made a strong SGX debut after raising 771.1 million Singapore dollars in Singapore's second largest IPO of 2025, with units opening above the 88-cent issue price and closing near a double-digit gain on day one. The listing pushed this year's IPO proceeds higher and revived interest in yield assets with a pipeline spanning worker and student accommodation across Singapore, the UK, and Australia, drawing cornerstone support that signals institutional confidence. For local income seekers using SRS or cash, note initial indicated yields and the sponsor's stake. But remember, debut volatility can be high. Scale in only after the book stabilizes and watch acquisition execution and gearing levels. SIA Engineering, ticker S59, was up about 6%. While there was no single headline, strength likely reflects steady aviation recovery and maintenance demand as global flight capacity normalizes and long-cycle checks fill order books for regional MRO players tied to SAA Group's network. For investors, MRO demand tends to lag air traffic upswings, so earnings can catch up even if ticket data cools. But margin pressures from labor and parts should be tracked before adding for dividend stability. In the STI context, a firm transport cluster can offset sluggish property names, offering balance and diversified baskets. Alibaba HKSDR 5-1, ticker HBBD, was up around 5%. Tech-adjacent risk appetite improved as investors rotated into large-cap China proxies listed in Singapore, riding broader hopes of policy support and stabilization in mainland tech sentiment. For Singapore portfolios, keep position sizes modest, given cross-market headline risk, and set clear stops around event windows such as earnings or policy meetings. The read-through is that when China beta lifts, any STI proxies can get a tailwind, but the move can reverse fast on policy disappointment. Manulife, or a related USD financial proxy, was up about 5%. Financials enjoyed a firm tape alongside insurers, with buyback chatter and yield support drawing flows into stable cash generators. For CPF-linked strategies that prize resilience, stagger entries, and prioritize balance sheets with strong capital ratios and consistent distributions. In index terms, financial strength can cushion the STI's broader dip, but rate path shifts still sway valuations day to day. On the losing end, Centurion Corp, ticker OU8, was down about 10%. The parent fell despite the successful REIT spinoff, which is common when value migrates into the listed trust and the market replaces the sponsor's retained assets and fee stream. For investors holding the sponsor, check post-IPO structure, stake, and use of proceeds, and see if future asset injections and management fees can rebuild earnings quality before averaging down. In market context, sponsors can lag in the short run as the spotlight moves to the yield vehicle, so patience and clarity on capital allocation matter most now. Food Empire, ticker EP1013, was down about 7%. The company raised about 42.8 million Singapore dollars by placing 17 million treasury shares at $2.52, which broadened liquidity but diluted near-term earnings per share, often pressuring price right after placement. Management framed the move as a way to fund growth, optimize the balance sheet, and expand the institutional base, which can pay off if return on invested capital on new projects beats the cost of capital. For holders, watch how fast proceeds convert into earnings and whether margins hold in core beverage markets before treating weakness as a bargain. Hongkong Land USD, ticker H78, was down about 7%. Sentiment stayed soft on Hong Kong and China property exposure, with macro overhangs like office vacancies and slow sales weighing on developer proxies. For Singapore investors, dividend stability is the key filter, so track rental reversions and asset recycling plans to judge sustainability in a higher-for-longer vacancy world. In the STI, property weakness offset gains in yield and transport, keeping the index range-bound. Yanlord Land, ticker Z25, was down about 6%. China residential softness and policy uncertainty continued to clip risk appetite for developers with mainland exposure, leading to de-risking on rallies. If considering a contrarian nibble, demand clear catalysts like pre-sales acceleration or asset disposals to cut leverage, not just hope for blanket policy boosts. The sector still trades on headlines, so position sizing should be small and time horizons long. PropNex, ticker OYY, was down about 6%. Cooling in resale and private transaction volumes can sap near-term earnings for agency models, and higher mortgage stress keeps buyers cautious despite selective new launch demand. For dividend hunters, watch fee take rates, agent count stability, and project pipeline to judge how cyclical the hit might be over the next 2 quarters. Within STI and related lists, property services lag when rates bite, so rotate only when transaction data turns up for a few consecutive months. For a fuller breakdown with entry and exit zones, charts on placement overhangs, REIT gearing paths, and insurer buyback math, the detailed premium post is up now on the Investing Iguana Substack, including extra names outside today's top 10 that are setting up on volume squeezes. So check the link in the description to read the full written analysis and strategy guide. The STI slipped about 0.85% this week, which tells a simple story. Defensives and yield did better, while property and China-linked names dragged, leaving the index stuck in a tight channel. The action says to keep a barbell, steady cash generators on one side and selective growth on the other, while setting alerts around policy dates and earnings to avoid headline whiplash, and for CPF or SRS, favor balance sheets with consistent distributions and clear capital return plans. The edge now comes from sizing and timing rather than broad market bets, so step in gradually, let price confirm, and use simple guards like stop levels just below recent higher lows. Here are the key takeaways. Buybacks and new listings drew cash, placements created short-term dips, and property weakness capped the index, so keep risk tight and focus on names with clean catalysts and cash flow. Staying sharp with these daily reads can be the difference between chasing heat and catching durable trends in Singapore's market, and that's how steady wealth builds over time here at home. Drop thoughts in the comments, hit like, and subscribe to stay on top of the next move, because the market pays the most to those who prepare, not those who react late. So, we've broken down today's 27 September 2025 STI movers and shakers, and I've given you my personal take on what it means for your investments here in Singapore. If you found this video helpful and want to seriously level up your investing game, please give it a like, share it with your friends, and subscribe to the Investing Iguana channel so you don't miss our next insights. And for those who want to be truly ahead, our premium members gain exclusive early access to all our videos, often a full week before anyone else sees them. This means you get Iggy's detailed analyses and urgent insights on major market moves directly to your inbox. giving you a significant head start. It's just $1 a month, less than a cup of coffee. Think of it as your consistent daily dose of financial fuel for smarter decisions, delivered before the masses. Ready to join the inner circle and get that early edge? Just click the link in the description below to become a premium member today. For our next watch, check our video on reading STI sector rotations with simple breadth and volume tells to spot turns before the index moves, which pairs well with today's names and themes.